General Electric beat earnings expectations in the second quarter. GE also announced that CFO Jamie Miller is leaving the company. Shares, as Jared just pointed out, are trading down. And joining us to discuss this, CFRA Analyst Jim Corridore. There were some bright notes, though, in this earnings report for GE. Are you convinced that they're getting ahead of some of the problems that have been holding them back in the last few quarters?
Yeah, well, it's a very long process, and they are making slow, steady progress. But investors are a little impatient. They want to see it move a little faster. They showed improvement in the power business, costs down, orders up, even though revenues were down sharply. They showed improvement in several other sectors. They did improve their cost structure. They made progress on cutting debt at capital. So there's some movement, but certainly the news that their cash flow is going to be a little bit lower than they earlier expected, partly because of Boeing, that seems to be what's moving the stock down today.
Is there also any concern, Jim, about the departure of the CFO? She had been at the company longer, but she'd only been in that role for about 2 years. Anything we can imply from that?
Yeah, I only worry about a CFO move if it's an abrupt departure, if it looks like the company has been overly aggressive with accounting. I think GE has been much more transparent with their accounting over the past couple of years, particularly with the new leadership. So I'm not overly concerned about this departure. I think it's going to be an orderly transition, and she's staying on until there's a good successor appointed.
Yeah, I had a question. When you look at this company over the next 9, sort of 12 months, what do you think are the key catalysts that can maybe move the stock higher? And then in your opinion, what do you think the biggest risk factor is? Is it another leg down in free cash flow or some other issues?
Yeah, I think I look for continued execution, improving cash flow, falling debt, and basically the company has to start hitting its targets. It did a good job this quarter in beating most of our expectations on the targets. As long as they continue to do so, I think investors will be heartened. But free cash flow and cash flow of industrial operations has to improve. That's something that got a little worse this quarter, actually. And so we need to see progress on that. That's the biggest risk to the company. Obviously, the news that Boeing is delaying payments is hurting GE's cash flow right now. And if the MAX if production is halted, I think that's going to push cash flows even lower. I think that's the biggest risk right now.
Have they said in any kind of discussion with analysts or on earnings call whether the discussions they have with Boeing, if they're getting any hint of when things get back to normal?
I mean, Boeing has announced a target of fourth quarter, starting to get these planes flying again. Once that happens, deliveries will take up and start moving again. GE has basically said that the cash flow that they've lost from Boeing is just a delay in timing. Once these planes start moving again, that cash will come back. So it's basically just a 2019 story. I also cover Boeing. I do expect the plane to start flying towards the end of this year, and I think that it will get recertified eventually. So as long as that does happen, this cash flow situation will reverse itself next year.
You know, Jim, some of your competitors or colleagues, what have you, in the sell-side community keep expecting that GE is going to, that the bottom is not in, that the worst is still yet to come, that everything's not out there. So when you're talking about that being a risk factor, the cash position, for example, like what kind of probability do you put on it?
Yeah, when you talk about a company that historically had been very aggressive on their accounting practices, under Jeff Immelt, they had overly forecast time after time again and basically deceived the street on what their underlying operations were. That's something you have to take into account. But now under Larry Culp, they've been much more open about their accounting policies. They've been very forthright about where the issues were and what they were doing to address them. Certainly there is a risk that there could be another shoe to drop. They have to reevaluate their insurance assets again in the third quarter. That could lead to another charge. But I think most of the charges at Power, huge goodwill write-down earlier this year, a lot of the bathwater has already come out negatively. I don't think there's going to be another shoe to drop that's of that magnitude. So we're optimistic here.
CFRA Analyst Jim Corridore, thank you for joining us.
Thank you.